excited as I am for this panel. Although it says up there that I'm a non-executive director of Innovate Finance, in a former life, I founded a digital wealth management business called Scalable Capital. And so for the first time, I'm sitting on the other side of the table, going to be asking the hard questions. And for 7 years, I always faced this type of panel alongside a traditional provider of financial advice and spent most of our time debating the term robo-advice. And I think this panel gets a little bit boring after once in a while. So today we've got a completely different, fresh leaders of investment technology and wealth tech to talk about their views. But most importantly, and I think it'll be the first topic that comes up, we have ChatGPT as a new technology that could potentially disrupt this sector as well. So I'm excited to talk about that. But I'm going to let them introduce themselves first. So Mary, do you want to start us off?
Yeah, sure. It's so great to be back on stage at IFGS. Good afternoon, everyone. My name is Mary Agbesanwa. I am FinTech Growth Lead at Seccl. What we do at Seccl is we are an embedded investments platform. So we are an API-led custodian that allows people to launch investment apps and propositions. We provide access to ISAs and pensions, and we currently have 22 live firms, including Chip, GoHenry, Wombat, Circa 5000, and many other UK leading investment apps. I'm FinTech Growth Lead at the company, so focus on everything related to growth and sales. And yeah, I'm really passionate about how technology can be used to disrupt wealth management.
Hi everyone, I'm Alex. I'm CEO of PlatformOne. We are an investment platform for financial advisors, wealth managers to manage their underlying clients with us. A bit like Mary said, sort of ISAs, pensions, etc., and a number of other different wrapper types, both on and offshore as well. But interestingly, we're also a technology company, so we license aspects of our tech to other entities in the wealth sector. That could be brokers, it could be fund managers, it could be advisors, and even other platforms like ourselves. We even cannibalize our own business at times. So that is PlatformOne.
Hi guys, pleasure to be here. I am Matt Freeguard, investing product manager at Shares. Shares are a B2C retail trading platform active in the UK and across Europe. And the interesting thing about what we do with Shares and the way that we're disrupting that European trading market is really indexing on the power of social. Now, we see that in a number of sectors, in a number of industries, people like building networks that can help inform what they're doing. And we're taking that social graph and trying to get a sharp understanding of it and seeing how that can have an impact on investing by empowering users to build those networks, to start their financial journeys and start their investing journeys. So that is Shares.
Hi everybody, my name is Martin. I co-founded Lightyear roughly 2 years ago, and the first premise why we decided to go ahead with that was it's weird to look around, like you can see like lots of fintech apps and whatnot across Europe, but I think like when you go and like look into what's actually happening, then none of them really works. I know it's kind of harsh statement, but if you look into Europe, you have 500 million people, and most of the Europe is not well covered in the access to the global markets, local markets. Prices are crazy high, local taxation, all the European fragmentation is not really covered. So like we're going and kind of tackling that. So far in the last 2 years, we raised 35 million, entered into 21 different markets. Last week we entered just Hungary, and like the first feedback has been that like people really need kind of localized solutions to actually start investing, because we don't only invest in the US, we want to have our own view.
Very cool. So a wide range of different propositions and hopefully therefore some controversial takes against each other, but we'll have to see. Alex, I was keen to start with you because I guess you're closest to the, more traditional industry, at least that's how I have it in my own mind. And we'd love to talk about the emergence of technologies like ChatGPT and large language models, which, on the face of it, and I've been, excited to use these technologies over the last couple of months, could be the first technology that we have that could potentially disrupt that traditional advice process. So I'd love to hear your thoughts on what we've seen so far and what the future might look like when it comes to implementing AI tooling like that in the financial advice and in the broader investing process as well.
Well, much like yourself, I got pretty excited when it first came out, and like I'm sure many of you out here did, went online and started mucking around with it myself. And it's quite interesting. I run the risk of sounding a little bit like a naysayer at times when it comes to ChatGPT. I think there's definite applications of it, but there's quite an important distinction in our world between investment and asset management, where you're looking to get returns for people and their investments, and then financial advice and cash flow planning. And they are distinct. And I think this emergence of robo, that Adam, that you mentioned at the beginning, has kind of merged the boundaries between those two over the last few years, and sometimes poorly. I think there are applications of ChatGPT where there are quite explicit parameters and boundaries which it can work on. I do not think, from my own personal experience so far, it's smart enough in other areas. And I think one of the big issues is liability, particularly in a regulated environment. What if this thing tells you the wrong thing, and who is responsible for that? So if we implement that at PlatformOne, and some poor investor gets a bad return, or even worse, some huge tax implications, or some liability against their own personal livelihood, what do we do about it? It's even happened in the medical field where ChatGPT is giving the wrong medical advice, and it doesn't tell you, importantly, that it is giving you the wrong advice. So it doesn't even know it is wrong. That's the dangerous thing. So I think if it's done with the right sort of industry standardization, people coming together and working on honing it for this sector, it could do very well, but it's got a little way to go yet.
I guess it's not going away. Matt, I'd love to hear your point of view from the brokerage side of things. Very different, I guess, viewpoint from there.
No, for sure. I think, like you were saying, Alex, it's currently quite unregulated, so there is a risk that you're going to be getting the wrong information and the wrong advice. The way that I think it can be unique and can be quite powerful is the education piece that I know we'll cover in a little bit more depth later on. But one of the big barriers to entry right now in investing is that lack of education and that lack of understanding. Now, products really focus on taking users on that investing journey, right? With that seamless experience, with their own unique take on it. And there are ways that you can educate users within the product. But what ChatGPT can do is answer your questions very quickly and largely accurately when it's coming to do with what's happening in the market analysis and market trends. Now, I fully echo the caveat that we need to have a real sharp focus on what happens if it is wrong and checking that you validate that information yourself. But when we're thinking about that education piece, I think there is a lot of power in what it can do to supplement other models.
Thank you. And I think for the first time on this stage, we have kind of the brokerage and that advice model here. So I want to just double click on that a bit. And Mary, obviously you kind of sit in the middle of it as a technology provider to a lot of different propositions. But we've been launching robo-advice propositions now in Europe for 8 years or so. And then brokerage has become a very, very popular proposition that got, I guess, kind of came to market in 2019, the neo-brokerage space. It has grown quite quickly. Where do you see the future? How do you see people managing their money? What type of propositions do you think ultimately are the ones that win here? Because brokerage seems to have kind of had several strides ahead, and obviously in the light of a regulated wealth management solution, which might be a better offering, but has struggled to grow.
Yeah, it's a really interesting question. And as FinTech growth lead at Seccl, I speak to loads of FinTechs looking to launch investment apps. And I think I would say that FinTechs are definitely winning when it comes to customer numbers and access. I'm sure we can all relate to sitting on the tube and seeing over a dozen different FinTech apps that are talking to us about investing. So in terms of customer numbers, in terms of improving the customer experience, the user experience, and providing people with access to ways to invest in the stock market accessibly, I definitely think the FinTechs are winning there. But definitely when it comes to retaining those customers, keeping them engaged, particularly when things aren't always going upwards to the right, as we've seen more recently, I think that's the challenge. And really thinking about what a profitable WealthTech business model looks like is what we've seen some of the FinTechs that we chat to still try and explore. And really it's about thinking about the features, thinking about the target market, and spending a lot of time on the marketing, the customer acquisition. And when FinTechs work with us, they're leaving the kind of custody, the trading, and the execution to us at Seccl so that they can focus on the things that matter to them most and that are closest to the customers.
I guess, Martin, what's your take from a brokerage point of view?
I think like when you started Scalable, it had unique time when it could really work, and like it worked to have like nice AUM there. But I think these days, like it's also one of the reasons why you need to start robo as opposed to brokerage, where lack of the infrastructure was missing right now in Europe. So I think these days, I do think like a brokerage is kind of more encompassing solution, what can offer products for various different types of people, not only the people who want to be in one side of the passive world. So I think today we are in this kind of weird situation where foundation is still being built. So if you go into all the markets, then you have like various different currencies, languages, taxation questions, tax wrappers, like all this kind of stuff, what needs to happen to actually have a good solution. And on top of that, you have people who want to have passive long-term investors, dividend investors, people who are maybe day traders and whatnot. So effectively, like we are getting into closer and closer to the position where you have infrastructure, what on top of that, you can actually build something what like more personalized for the people, what they want to do. Because I think today the big problem is that most banks have some investment solutions, but mostly they're really weak because they don't, A, they're crazy expensive, but B, they don't really consider any of your wishes. So you can't build a good product on top of that. It doesn't really just work.
Yeah, no, that's an interesting one when I think about personalization. I guess you were touching on it as well, Matt. I'd love to double click on that area as well in terms of, where does that lead us in terms of, providing personalized solutions for individuals? Is that very much the future? And if so, what does that look like, I guess, for people who are, still in the fringes, who are kind of the innovators who are using these solutions?
Yeah, for sure. And I think the way to start this answer is thinking about all industries, not just FinTech, right? And user bases right now, they feel like they almost have a right to customized solutions, right? Because there are so many options in so many markets and so many in the brokerage world. The user base isn't so sticky, so they can very easily create accounts for the new place, move their investments around. Now, how we look at this at Shares and how we frame it at Shares is there's really 3 key pillars to what we want to do. So the first of which is data-driven decision-making. Every day we are looking at our data of how users are using the platform, how they're moving through the platform, how they're interacting with us to make sure that we really understand their behaviors and can build for those behaviors. The second, which is empathy for the user. We have a great user research team who are speaking to our users every single day to understand what they want. So we're not just building what we think they want, we're building what they know they want. And that's why they're staying with us, that's why they're investing with us. And then the last one is product excellence. Everything that we do, we make sure that we're very proud of it and we're very happy with it. And when we release it to the market, it's exactly what we want to release, knowing that our users will like it and we have the data to indicate that it's a solution that they're going to use. And given that, and given the user's desire for customizability, especially in that brokerage model, when we're building on those 3 pillars, that's where we're seeing the success come from.
Got you, makes sense. And Alex, from personalization from the financial advisor point of view, is there any differences to how you think about this?
Well, it's interesting. I was just listening to that there, and I think there's a balance with personalization because you do sometimes run the risk of personalizing or configuring to a consumer base that doesn't actually know what they want or need. And that happens in lots of industries. And you mentioned earlier, Matt, about financial education. It's absolutely abhorrent in this country. It's so poor. I mean, if I wasn't in this space, in the wealth space myself, I'd have no idea about personal finance. Most of my mates have no idea about personal finance. So I think that's an issue that needs to be tackled first. And it kind of answers your point earlier about what's the future of brokerage, where you can have all the best brokerage capabilities on the planet. But if people don't know how to access it or what they're accessing or why, importantly, then it kind of doesn't really work. So that does change slightly with the financial advisory community because by default, they're a qualified, educated set of people who are there to educate others. So configurability does become quite important. I think for both Mary and I, actually, in our respective businesses, configurability has been the key to how we grow our businesses because they want to have brand retention, they want to service a particular customer subset that they're looking after, and therefore off the shelf doesn't quite work as well.
Yeah, and I think that's a message which sometimes gets quite lost when we have these conversations about traditional versus more technology-assisted investment, in that we're opening up a market to way more people, right? And I think we talked about it, Mary, and I'd love to hear your thoughts on, I know this kind of term gets banded around, this democratization, but there are ultimately segments that were completely absent from solutions that, you're actually powering today. Would love to hear, where that goes in the future and, how you get more people investing.
Yeah, I think what we've seen at Seccl is that hyper-personalization, personalized solutions, when it comes to D2C investing, definitely work. It's about recognizing there's an under-tapped market, whether it's women or minorities, that people who have traditionally been underserved by financial services. And I think there's a massive potential to build products and solutions that are designed for this community. Naturally, it means that these customers will be more sticky, they'll build some sense of brand loyalty, and we've seen some of our customers do that really well. And all the data shows that, particularly if I just look at the gender lens, there's a massive gender investment gap, massive gender pension gap. One of my favorite, but also dire statistics is that if women invested at the same rate as men globally, there would be an additional $3.22 trillion invested in global markets, which is crazy. That's like 1.5 apples in terms of the Apple company since I last checked. So that's really crazy. And I think that designing financial solutions with particular communities in mind will mean that, again, you can focus on what that community needs, where their interests are, and ultimately will hopefully mean that your business is more successful as well.
Makes a lot of sense. Martin, you're present in continental Europe and got clients all across the continent. Where do you think people are doing a good job generally? Is there any places you could look at and say, like, that's the country from a financial literacy point of view or an investment offering point of view? Do you think, they've got it right there, or is it a complete disaster wherever you look?
Kind of disaster, I think, like generally. Like this is one of the things, like if you consider like US versus Europe, then we are in Europe 3 times less kind of have education around and around the markets and also like participation in the markets. So it would be nice to kind of bridge that gap and then like maybe go a little bit further. But I think something which is really fascinating. For example, I can share about the Hungarian launch, and you can see in various different markets you have the influencers who operate in different manner. So we have some markets where you have these boring influencers who explain you how to actually invest and not to take a crazy risk and like talk about fundamentals and whatnot. And then you have markets which like the main influencer driver is effectively the clickbait YouTuber who's like buy Tesla, sell Tesla every day. So you have, I think it's a cultural thing maybe, where people come together. Like in Hungary, we were like really surprised. Last week there's like 4 groups, Facebook groups, who were discussing like what are the meaningful things, how to kind of tackle the inflation and how to invest in a kind of suitable long-term manner versus some countries which is like just gung-ho. So I think, yeah, it all starts from home and educational system, but I think like there's a lot to do the way you build your product. If you build your product in a right way and you don't incentivize like weird bad behaviors, you don't send an SMS for a person every single day that something went 5% up or down, then this is already quite a bit better behavior.
Yeah, so it's a product and a culture thing. And so where does the UK rank in the crazy finfluencers space versus the sensible ones?
I think it's maybe like UK is a little bit more developed as a fintech market. There's a lot more options out there than most of the other European markets. But I think you have both sides here. You have these people who are really rational, but I think UK has also this American side of
Crazy.
YouTube.
I can imagine. And Matt, so it shares obviously very community focused in that proposition. I'd love you to talk us through how important that is as part of your solution, particularly when we're talking about these elements of financial education and literacy.
Yeah, no, absolutely. Thank you for asking me about this one. So the existential problem is, where are investors going to go to get their information, right? So we've seen countless times in equities markets, the likes of Reddit and the clickbait piece you came in, like, invest in GameStop, it's going to go to the moon. Frankly, it didn't, and it won't. So there is this risk within open information sources that there is no moderation and there is no way to like regulate it and validate information. Now, how shares are looking to frame this within our product is moderating that information. So for those that aren't aware, we've got a segment of our product that focuses on community. So you've got UK investing community, beginners community, historically some stock-specific communities. And what we've got on our platform is ambassadors who have been selected by shares to come onto the platform and start to educate users on topics like dollar cost averaging, topics like how to pick your first investment, topics on risk profiles, because a lot of users don't understand, like, if I invest in this stock, what could it do to my risk profile? So when we're looking at moderating that, we're making sure that we don't go into that slippery slope of advice, as we know, regulated. We don't want to go near that. But what our ambassadors do is empower our users and educate our users and enable them to start taking these decisions themselves. The moderation makes sure that, like I said, they don't get into that advice piece. We're looking at the performance of those ambassadors as well. So it's all well and good saying, look, dollar cost average, but if they're dollar cost averaging and in the past 3 months they're 20% down, it's almost like practice what you preach, right? So coupling that moderation with that community, build your network and build your understanding thing, we're seeing that to be successful in empowering users to start that investing journey. And the end goal for us, right, is they don't necessarily need those ambassadors anymore because they almost become ambassadors themselves. And it's that network effect of them then being able to take what they're learning and what they're getting from shares and educating their networks, and it's just going to spin out from there.
No, it's an interesting model for sure. It's a really short session today, and we have a couple of minutes left, so I'm going to try and draw things to a close. And I had a question that I find interesting, at least, but hopefully everybody else does. But when you think about, and I'm going to ask you to do a little bit of forecasting, let's say, think about in the future, let's call it 5 years from now, what do you think the investment landscape is going to look for, I guess, the main person on the streets, but also the innovators as well? What are people going to be doing on the fringes? And, obviously propositions like yourselves being very close to that market. So, Martin, I'd love to start with you.
My answer is going to be really boring. I don't think there's going to be a lot of bells and whistles and somebody will decide in front of you what to do. I think in next 5 years, what's going to happen in Europe is significant shift from banks to online brokerage, and online brokerages will work for whoever you are, whatever country you are, whatever type of investment you are, they work in that way. So I think that shift is going to be significant.
Matt?
Yeah, I actually largely echo that. There's a lot of
we'll pass that.
But no, so there's a lot of inertia in the traditional investment models right now. So do I think we're going to be a place that's far different to where we are now? No. But if we can nail this problem of education and the empowerment journey, we've seen Europe lag a little bit behind America, right? Fees go down, then people put fixed fees in to create transparency. So my prediction, increased transparency, more empowerment of users, and AUMs of brokerage is just going up as more people become comfortable with their investing journeys.
Perfect, thank you. Alex?
Yeah, I think there will be a big move with the younger generations like millennials and Gen Z into the asset classes that are most visible on social and out there. I think where there might be a problem is where you need to get more esoteric or advanced investment planning or tax planning advice. And so I think there'll start to be a shift as those millennials start to get older, and sadly or not, our parents start to die and money moves around. People are going to have bigger decisions to make, and so that's going to be a big shift.
Good to hear.
Hopefully not anytime soon. Yeah.
Go on, Mary, finish off.
I think I would plus one on what everyone said and definitely agree. I think the one good thing that Finfluencers have shown us is that there's a consumer interest and demand for investing, and that people are interested and people are searching on TikTok, on whatever platform it is, about financial advice and personal finance. So it's great that so many people are engaged. I'm excited to see investing move from just financial services to retailers to credit checking companies as a way to drive engagement and loyalty with their customers. We're having really interesting conversations with not just financial services companies at Seccl. So I'm really excited to see investing become everywhere.
Very exciting. I'd love everyone to give everyone a big round of applause on stage. Mary, Alex, Matt, and Martin. Thank you.